day of positivity for the NSE. We have been seeing a nice upward momentum. Many say that we could see a little bit of downside as the year starts to taper off. Is this your view as well? We're still seeing continued buying in the banking sector in particular.
Hi, Elena. Thanks for having me. Like you said, there's been a steady improvement in the market. We've seen the stock market rise steadily day by day. And like you said, the banking sector has been the major driver. And I think the point we keep on emphasizing is that there's still value in the strong banks. Valuations are quite attractive at this time. 2011 PE is 7.2 based on our forecast and for our coverage names. And we feel that there's still value in those names. And for the distressed banks, I think improvement in the activities of AMCON has really driven interest in that as well. I know AMCON has mentioned that it will still issue a bond this year to buy up toxic assets for the distressed banks and also buy up margin loans for the banks as well. So I think that's one major reason why we've still seen steady improvement in
what is the market pricing
for the banking sector.
What is the market pricing in with regards to the issuance of the bond by AMCON going forward? Surely the market has various expectations.
I think the market has various expectations, but I think what also the market is considering as well is M&A activity, because at this point in time, buying up toxic assets of the distressed banks won't really bring in value. AMCON will still have to inject capital into those banks, and M&A deals have to happen as well before investors can really derive strong value in the banks. And so I think really what investors are saying or doing right now is that being quite speculative, really, because you still can't scientifically calculate the value of the distressed banks. But I think they're all just trying to take their chances right now, and seeing that AMCON is strong and focused on resolving the banks, I think that's also made interest strong.
Well, I mean, the sense I'm getting from you, there's a lot of speculation when it comes to the banking sector. That really what drove prices higher prior to the crisis, and during the crisis, that is exactly what drove prices much lower as well. Do you think that some investors are perhaps putting too much risk on their books in the hope that we will see a significant recovery in the banking sector?
Like you said, there's been speculation in the banking sector, but what I'll say is speculation has been more around the distressed banks than the banks that passed the CBN audit. The banks that passed the CBN audit have been delivering value. A couple of them have paid dividends this year, and we expect most of them to pay dividends by the end of the year. So with the strong banks, I won't call it speculation, it's more of investment. And if you look at their price rally as well, they haven't really rallied as much as the distressed banks that has really been driven by speculation, and it's really been driven more by local retail investors than institutional investors. With the stronger banks, it's really demand for those names have been by local institutional investors and also foreign institutional investors as well, because you can see steady quarter-on-quarter improvement in their performance so far.
One thing we shouldn't underestimate is the strength of the Nigerian consumer going forward, and a lot of spotlight has been put on the strength and the buying power as well. Do you think we'll see some sector rotation and perhaps rebalancing of portfolios and investors wanting to have enough exposure to the Nigerian consumer?
Sure, I expect that, and we've already started seeing that the likes of Nestle, Nigerian breweries, Guinness, Flourmills, have Nestle as well. They've all experienced increasing demand, and you've seen that in their share price increase as well. And I think we'd expect to see more of that going forward. But the fact still remains that it's the banking sector that drives the market. And right now, the banking sector still controls the majority in terms of sector split right now. So that's why investors will still have more exposure to the banking sector than other sectors in the market. Through DCP, there's also been an increase in the cement names as well, and we'll also start to see foreign portfolio investors and both local professional investors as well increasing their allocation for cement in their portfolio.
Which are your stock picks for 2011, given the fact that there's still a lot of speculation that could filter through in the banking sector, perhaps a bit more upside, and as you alluded to, the consumer stocks also doing quite well. Of course, not to forget some of the industrial stocks also looking very positive.
Right now, we have quite a number of names that are on our high conviction list. In the banking sector, we like Diamond Bank, we like First Bank, we like GT Bank, we also like Sky Bank, and these names, all three, they all offer over 35% upside potential, and most of them, I think apart from GT Bank and First Bank, they're all trading below book value at this point, and they also average ROE for the names is over 15% for 2011, and based on that, we expect that investors would still buy such names and that they will tend to their fair value before the end of 2011. And for the consumer names, we like Oando, we like Flourmills, and we also like DCP. DCP is also a company that we feel would give investors good value in 2011 as well.
Yeah, I'm glad you mentioned Flourmills. The book building process for 35 billion naira. The bond issue closed yesterday. We have seen a couple of these big bond issuances by corporates coming to the fore, not nearly as much as what we've seen in the likes of Kenya. It seems that the government in Nigeria is issuing far more bonds than perhaps any of the other governments in the region. Give us your view about how government perhaps could crowd out the corporate sector, or vice versa?
I think right now the government also, I think through the CBN also, is trying to encourage the corporate sector to issue more bonds, and I think that's why if you look at what's been happening right now, I think the CBN is trying to try to make funding costs in line with inflation, and that's why you'd still see corporates issuing bonds at cheaper prices right now than the federal government. So I think in a way it's still cheaper for the corporates to issue bonds. And because the size is still quite small, and portfolio investors, especially the local portfolio investors, trying to increase exposure in the corporate market, they're also trying to, I think, pick up those. And right now I think it's still very, very small. What we have in the market is still small, but it will take a while before it develops fully.